Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, we got a cool indicator that we want to share with you, the results of which may not be so cool, but you need to be aware of it because it's printing at levels that are meaningful and historically have had a big impact. So let's dive in and check it out.
Trade Genius.
Hey buddy, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
All right, Bob. So I think we've featured this before, the McClellan oscillator, and interesting levels here. What do you think?
Yeah, we talked about this in a different format, I think last week when we talked about the MAG 7 versus the rest of the market and also the all-time highs in SPY, but 10% down in Russell. So if you throw the narrative up, we'll talk about that first, is that the McClellan oscillator is at minus 35. Okay, when it was negative last time and SPY was making all-time highs was just above the pre-COVID high. And then immediately it followed, you got a 10% correction in the market. I think we're setting up the same thing again, Phil, and it's tying right into the window of weakness that guys like Jam Croissant and others that follow the derivative markets are saying, hey, you just don't have the fuel behind the market here. January, February, March is tend to be a little bit weaker anyway. And if you just made a situation where the oscillator is negative, but you're making new highs, it's called a divergence. Always want to pay attention to divergences. Either they're bullish divergences or bearish divergences. And, with everything else stacking up. And I think, on today, Wednesday, Thursday, Phil, I think we probably should talk about maybe changes to the QRA coming up too, because Janet Yellen has been providing free fentanyl to the markets, and now she's going to start charging for it.
Right.
And she made up the dose, and it may kill some people. So I think everything's tying into here of, you should ring the bell. You should take your profit. You should enjoy the late winter. Go skiing, go to Florida, go to Bahamas, go to Hawaii, but stay away from speculating here over the next 6 weeks because everything is raising alarm bells for a correction. Like I said, we're not calling for a crash. We're calling for a crash later in the year, but I'm definitely looking for a sharp pullback here that, of course, when everything V downs, Phil, they pop it up. So what do you think about this?
Well, I think that the McClellan printing at these levels is usually when I look for a bullish divergence, and it provided some pretty good signals. It's such a common indicator amongst technical traders that you kind of have to just see where it's at because that there's going to be a lot of people reacting off of that. But I think its strongest point is when it does give you a bullish divergence. And from the beginning of 2022, we've had a couple of really nice bounces off of bullish divergences on that. But yeah, no, it's really bizarre because here we are at levels that you would start to look for a bullish divergence, but in that you would have a pullback that you're dealing with. And we're making all-time highs here. So it's a major, again, another alligator jaw type situation because it's a divergence of two data points that normally don't get this wacky. And we're starting to see that in other things too, even the Asian markets. I was reading about a fund that basically closed shop today, essentially because they could not trade their model anymore because nothing was making sense. The correlations are breaking. And you will see that at the tops of markets. Things get really wacky, things start to dislocate. And the price at which things are trading are somewhat because derivatives are getting skewed out and really not based on fundamental things. And so this is where the derivative game gets a little weird and doesn't really reflect the underlying economy or the underlying performance of the market. So we just have to get through this period. And as that starts to spin out, and it usually starts to create extreme volatility in price and usually with pretty sharp moves to the downside. So like you said, at this point, when it was COVID and it was doing this, you had, January was okay, February, that end of February, then March, it changed violently and quickly. And it's weird because we're kind of in that same calendar zone and kind of the same technical setup here. Now, are we going to get another black swan to really kick things off? I don't know. And maybe there's a bank credit event or something like that, but they'll just sweep that under the rug with some other, funding window, I'm sure. So I think that unless there's something really wacky that happens or something, war, or some major geopolitical thing that pops off, then I think we will get a correction down. I think they're going to do something to stick save it. I think we'll get a pop, but then I think it's one of those things where the engine's out of gas, and no matter what they do, it's going to pull back. And I think Janet Yellen, I think what you mentioned with the QRA is that she juiced it. She's got to reel it back in because she has to save the juice for September, October, when they need this thing to rally hard into that November election. And I think that's really what the major game is here now.
Yeah, I totally agree. It's going to be really interesting, guys. Just more data upon data upon data upon data. For those people who play poker, this is a situation now where a strong hand, which are the dealers, are wiping out weak hands that are betting against them. And what happens is all these weak hands betting against them are gone. Now they're faced with strong hand. And then that's when the battle begins. And that's why, so when you start seeing shops that are blowing up that were betting against this, they run out of fuel. And you got to remember, guys like BlackRock and Citadel and all those guys, they have unlimited backing. So they could just keep doubling down until they blow you out. And then once they blow you out, then what are they going to do? Who are they going to feed off of? And then you get the retrenchment. And I think that's where we are. And you're starting to see it every day. Stocks are falling away while the major, Mag 7s are still fighting for attention. And the reversal on this is no joke. Okay. You just have to look at 2000, 2002 to understand what happens when the Mag 7 of those days lose sponsorship. The market just grinds down for months at a time and it exhausts you. And I think that's what's going to happen. Sharp correction pop, then we're going to go into all the way through 2025. I'm talking about some summer of this year, all the way through 2025 is going to be miserable for people who want to just be long only.
Yep. Guys, let us know what you think. You agree about the prognosis of basically headwinds into 2025? Post your comments below. Thanks, Bob. Thanks, guys, for watching. Check out our stuff over at tradegenius.co. If you want to get into the room with us, head over there and pick a package, and we'd love to see you in the rooms. We'll see you on the next episode. Take care.
Trade Genius.